Hello guys, I'm Mariano, the Trading Parrot, and in today's video we are going to look at how close we are following the steps of 2020 in this fractal. We have done 99% of the final steps before ignition for the price breakout. So in today's video we're going to put full focus on what's going on the 4 hour, where we are currently seeing a breakdown and retest to the downside, whereas on the daily at candle close on Sunday we're talking about a breakout to the upside. So we're gonna put everything on the table: the CME moves, the weekly time frame, seasonality, what the whales are doing, and definitely a special emphasis on liquidation levels to fully understand if we are really due for that final push of 15% to the upside from here. Guys, if you like this type of content, make sure that you are subscribed to the Coin Bureau trading channel. Dan, Aaron, and myself publish daily videos in the channel. Personally, I commit to publish 3 videos per week in this channel, mostly to do with Bitcoin. So if you are a hardcore Bitcoin fan, a trader, swing trader, daily trader, you are interested as well on altcoins, make sure that you also subscribe my channel, The Trading Parrot, where I publish up to 3 videos per day, 2 updates on Bitcoin a day, and most of the days I also cover altcoins. Let's go into the content. So we know that this week is a pretty big pack with economical events week, starting with the FOMC meeting. And so far, still the probabilities are inclined towards an ease of 96%. That will take us to 425, 450 versus 4% of no change. And a friendly reminder, we already covered this, that the balance sheet has increased slightly in the Fed from 323 trillion to 327 trillion. We still don't have a higher high here or any news of any impulsive increase similar to what we had in the past cycle, which is disappointing, but at least we have kind of stopped so far putting lower lows, which is kind of the heavy quantitative tightening period. So we are hoping that this breakout resumes to the upside, taking us into quantitative easing, but at the moment you can see that the balance sheet is just in the middle of nowhere in here, neither going impulsive to the upside, neither putting a lower low, which is really frustrating, because what we need is not just changes in the interest rates, but we want to see what they are doing, because typically when they add to their balance sheet, then Bitcoin rallies. It's as simple as that. Of course, that is not the only aspect. We have the global liquidity index, we monitor M2, we monitor injections of liquidity in China. We are in the middle of a period of injections in China, which is not as substantial as the previous period in 2023. So let's hope that the changes on the rates are going to be perceived as something positive. That is coming up on Wednesday. That is the 18th. Keep in mind that date, because we're going to talk about 2020 and the similarities now and see how things fit for that narrative of an impulsive move on the 16th, which is tomorrow. So if we look on the right hand side at 2020, you can see that after done 1, 2, 3, 4, 5 moves, and the impulsive move starting from October, from below the pivots, and same in here in 2024, you can see that we are now in the period of the creeping up. If you watch one of my older videos, maybe past weeks, we were thinking that we were in the creeping up in this area there, but we have to reshape the fractal so it matches what we are currently doing, which is respecting this trend line ascending, and we also have to move the fifth touch from here to here, and that's why we are now once again calling this the creeping up. So what the fractal is saying at the moment, if we base now the analysis on timing and on the shape that we can see in here, is that this high that is at 104.4k that happened on Thursday the 5th kind of gave us how high do we need to get with the price to produce the final punch and breakout towards the first resistance of the CPR. This year that is located at 108.3, but in 2020 that was located at 22k. That high of 104, in my opinion, has the same role as 19.9k being the 4th point of the fractal. 1, 2, 3, and 4. So literally, if we were to repeat same performance and same timing as well, which is not little to say, we need on Monday a candle that spans all the way from here, slightly below that resistance in green, similarly to what we did in here from the top pivot. So you can see that the proportion that I'm taking in here is from the 3rd pivot to the first resistance, slightly below, give or take. Doesn't need to be the same, but we are talking about we need a candle breaking out out from below 102, assuming that's where we closed today, pretty much getting to 106k. That is roughly between 4 to 5% green candle close on Monday. This is not a forecast, it's pretty much a requirement. Take it as that. If we don't do that on Monday, we might not be breaking the fractal when it comes to the shape, because if we do another small candle in here, we can still say, sure, we're still building that fractal. It doesn't really need to match the precise day, because in practice, none of these 5 reference points have done the same day either. So what I'm trying to say is, if we follow the shape and the timing, Monday is the day. If we just follow the shape, we can afford to wait a few more days and maybe creep up below 104k with small candles closing to the upside if you want, and eventually breaking that 104.4k with a larger green candle towards the first resistance of the CPR, somewhere around 106k. So we got these two recipes, the shape or the shape plus the timing. And again, this is just a fractal. Many fractals don't work out as expected, not because we found a fractal, we have established that we must follow and succeed, but since it's still playing out, it is 1, fun to follow, 2, possible. So let's look at what the 4-hour now has to say, because the 4-hour is kind of having a second opinion here, disagreeing both with the breakout from the head and shoulders, disagreeing with this move up in here, and also producing a breakdown, right? So we have the yellow support that we broke on Saturday at 5 p.m. in UK time, and since then we've been actually putting new highs, but again, this is kind of against the current because we have now the support as resistance, and we are right there at 62 in a resistance. So let me update the values of the reverse RSI so we can refer to those in the chart in the price. So I'm gonna say this is 62, maybe 63 to make it a bit more difficult. We have 37 on the lower end and the global breakout at the top. We could say 70, so let's keep it as it is. And you can tell that basically to turn this breakdown in here as a fake out, we need the 4-hour to close above 102.375. That is a moving target. That is the value right now. But if we continue to progress to the upside in a slow manner, it might change. It might become a higher target, as you can see in this area in here. So for example, if this was a rejection, but a small rejection, and then we come back up and we hit it once again, at that point, resistance might be RSI 67. So it's very important that you place these lines in your own RSI 4-hour in your own chart and not just take that static number and go away and think that it's valid for 3 days in a row, because it's not. A rejection from here that is final, I will say, is if it takes the low of 57 like this and continuing with a channel to the downside. That will mean that we have lost momentum of the 4-hour. Remember that there is a slow chance that price can rally against that and produce bearish divergences, which by the way, in the past 2 days, we have seen bearish divergences on the daily, 4-hour, hour. I keep getting notifications, and I think that is on one side a consequence of the price action of the weekend, which is low volume becoming really shallow in here, as you can see. For example, this breakout so far has produced on the 4-hour the smallest volume candle since the 7th of December. So it's a high risk at the moment to enter on the weekend. On this confirmation, as you can see, we have already produced a fake out on Saturday, and that took out the longs, bringing them down to 106, $100K, $600. Notice that the top of the range at RSI 70 keeps coming back down to 103.8, which is staying in line with the narrative that we need to break on Monday above 104K. If we did that on Monday, that will look something like this, right? And then we get the breakout above the green global resistance on the 4-hour, and this is how it will look like if we were to achieve the full target of the inverse head and shoulders. Notice as well that on the 4-hour we can see this large left, right shoulder and head, but there's another one embedded in the right shoulder. Here you have one arm and here you have the other arm. So it's very interesting, the combination of factors that we are seeing. I'm also seeing both head and shoulders on the RSI. You can see them, the large and the small one, both together, and they're pretty much shouting that we need to break on the 4-hour RSI 62 because both share the same neckline, the large one and the embedded two. The bottom of the range remains at around 98k in case there was a big rejection at 62 and a comeback for another test of the global support, which has been with us valid since beginning of October. Let's go to the daily time frame, and you can see that the resistance, the yellow line, is more or less at 64 RSI. The white line is at 60. We got a 30 here and an 86 at the top. So I think the values are not changing. Thanks to the weekend price action, not much needs to be changed. You can see that the daily candle at the moment is above the resistance, the yellow line that is coming there. 4 days in a row it has rejected the price, so this is the point of the highest risk. This is where the breakout can fail and get pushed back down below the range, or when we can settle it and turn it into a successful breakout. It's not just a breakout of the RSI. If it broke out from here, that will be how it looks. You can see it's a low quality with just one touch in there, but if we close there, it is a breakout. We will have to then assess with the rest of the data of liquidation pools whether it makes sense to break out there on a weekend, which is always something that you need to wonder yourself, because weekend price action is really tricky. But this is not just challenging the RSI daily, it's also challenging the top of the range on the volume profile. It is challenging the previous closes. It will be the highest close candle for Bitcoin history. And if there is a rejection, we have many levels that we need to look at for holding support and remaining bullish. We have the white line coming from the RSI 60, which is right there, and it has helped the price holding it since early August. We just have this fake out that did a couple of points below and then a hidden divergence after that is located at 100k.6. Then we have the confluence of the point of control from the volume together with the ascending trend line. More or less around the same area there is the support and resistance level of 97.5, which held the price here and also there, and even in late November. So this point in here is a confluence of many points of contact. Hopefully, if we mimic 2020, we don't need to go there, and we just need to continue putting small candles in here and eventually that breakout, assuming we follow that fractal. But if not, we need to be prepared to talk about that support being the most important one, and also the support from all these weeks that you can see here in the price at 95.5k as well. Of course, that will be below the point of control, which takes us back into slightly more bearish. On Friday, we closed at 101.8 on CME, and since the price now is above 102 and 102 on Binance, means that CME price should be somewhere around 103 now on CME. That means that if CME was open, it will be somewhere around here, and that is a gap so far of 1,500. That is not as bad, because if we started on Monday open and we come back, close it and come back up, that shouldn't be a big deal. It becomes a big deal if on Sunday we start pumping towards the 108k and we leave a huge gap in CME gap. In that case, it can be really difficult for traders to think that we are going to just carry on to 120 before coming back to 101. Big Whale Explorer continues at 75 points, which means that there's still more withdrawals than deposits from large holders. That is great. And MACD on the daily continues this trend down, similar to what we did in March. Hopefully, this is going to be the time that we don't end up doing something like this, which is instead of getting the bullish cross in continuation to the upside, we just dodge it and continue dodging it 1, 2, 3 times until we finally get a bullish cross below the zero line. But that is just a short move to the upside to continue going sideways for almost 8 months. What we need in here is obviously to overcome 104k and get a bull cross like this. Whether that is just a dead cat bounce later on, that's a different story. But to get that additional upside that we typically expect at this time in the cycle in December, we should be doing something like we did in 2020. Basically, a breakdown in here from the top, then a bull cross around 15th of December. You can see it in there, and then a higher high with a bearish cross way later. This is pretty much how it looks. A bull run that spans all the way to May. Make sure you don't miss my video where I I talk about the timing, how much we spend above an RSI of 70, which you can find in my channel. Look up for this video that is called Retest and Upside, 15th of January. Save this date. It's impossible to tell if that's going to be the date, but if it did play out, you're gonna hate yourself by not having heard about this thesis. Let's go with liquidity pools and let's see where is the motivation to attract the whales at the moment. In the last 24 hours, there hasn't been many liquidations, 275 million so far. We just pinch in here the red once, that was actually today. There is some leftover here in red and large levels of liquidity resume at 104.8. That is the short term. On the lower end, there is not much as you can see below the price. Looking at the longer term 4-hour chart, you can see that price has been having fun, taking little by little this blue area in here. Looking at the right hand side, you can see that is quite small relative to what starts from 105 all the way to 107.5, and that's why we've been talking in this video about the 108k. That is not a cycle top, that is a target for a swing trade based on liquidity pools that we were calling out when the price was below 95k, which makes it a really attractive target of 12k upwards for the price. That level there at 95k, we identify it as the global support, and you can see how accurate we were at pointing up that this is an incredibly high quality level of support that held the price, and it has already given 7%, and still having probably another 7% of upside if we manage to hit the top of the range. Bear in mind the risks as well, because the delta at the moment is 350,000. That means that the longs are at a higher risk. And if now we focus on the bid versus the ask, so far it has been a great alpha to long every time that the ask liquidity reaches an exhaustion against this trend line. Sorry, that is too short. Those are the areas in red at the top in the price. The areas too long is where there is high bidding, meaning that there are many orders limit below the price with the intention to buy. Not all of them get executed, but that signals interest in buying. The most recent one were around this area in here. At the moment, the ask is starting to increase towards this blue line there, but it's definitely less than what we had before, which means that there shouldn't be that much resistance if the longs manage to step up and break those levels. I'm talking about the order blocks at 103.5 towards 104.5 as well. Talking about the order block, the order book, you can see 105 and 104 are very heavy with almost 100 million together. If we put these three levels, more than 100 million. And then 110 has 43 million. Support at 95 roughly has 36 million, and lower 90k has 30 million as well. I think it's a tough one, but it's not impossible as we've seen in the past 6 months. We have 300 million and we managed to break above 100k. Now we have 1/3 of that. Let's see if we can break above 104 on Monday or the next week. And again, the risk is becoming really high. So if you are thinking too long from here, be extremely aware of the risk. I show you the delta favoring longs at a higher risk. There is some ask. I show you the 4-hour breakdown, the daily doing a breakout to the upside, but not confirmed yet, with a low quality breakout on the daily as well. So it's one of those scenarios that you can say it can be high reward, but also very high risk. Areas of lower risk were areas where we were pinpointing these circles in red at the lower end, which we do very frequently. As soon as we find one of those, we show them in the channel, and we mention that we are entered in the area of high value. At the moment, the analysis I'm doing towards the bullish case is for most of the people that are watching the video already entered at 94, 95k at support and are still holding on to those longs and on the lookout for deciding whether to just close the long if they feel like it's gonna be a failure, or if we're gonna get to 108 and beyond to still ride that long. Remember that one of the keys to succeeding is to let your winners run. Cutting them too short and not being aware of what's going on, it's also a mistake. I guess what I'm trying to say, the analysis is focused on whether keeping it rather than let's enter tonight in a long against all the odds and let's hope for the best, because that is not the spirit of the video. Liquidations at 104, great, we have a large one there. 93 is a significant and slightly smaller at 99.4. If we came back down and touch that and take it before getting the 104, that will be even better, because we will take out all these imbalances and allow the price to go to 104 without the weight that this is putting. Fair value gaps haven't changed. They start from 99.2 to 97.8. No fair value gaps on the upside today. And remember to watch the video about the timing of how long we spend above an RSI of 70 in each cycle. Is, in my opinion, as interesting as putting trend lines or doing breakouts on RSI. Timing is also a thing, particularly when talking about Bitcoin cycles. Alright guys, if you want to trade Bitcoin or altcoins, make sure you don't miss these 4 links in the description. First, we have 2 of the largest exchanges offering the biggest bonus compared to any other crypto channel out there. You won't find 60k bonus in many other channels or 20k bonus on OKX with 40% fee discounts. Those 2 exchanges have the largest array of altcoins, perpetual contracts, trading bots, and many different services. But they do require KYC. If you don't want to do KYC, get rid of your VPN subscription and all of that, then consider one of these top exchanges. You get 2bit and Bluffin, both of them offering pretty significant bonuses and discounts on fees. I will say try first with Bluffin and see if it requires VPN where you live. It's very low likely, but if you are affected by that, then go for 2bit, which is also pretty great. It's a copycat of Bybit built by the same people as a KYC alternative. Sorry, non-KYC alternative. Alright guys, I hope you enjoyed the video. I'll see you on the next one. Bye bye.